Hello everyone, my name is Raymond and I quickly want to take you guys through GBPUSD technical analysis. Before we start, don't forget guys to subscribe such that you don't miss out on the upcoming analysis. So before we start with the technical analysis, let's have a look at what's happening in the fundamental space. As we are very much aware guys, today we have some heavy data in focus, and that's the US CPI report that is expected to come out at 3.0%, something which is similar to the previous figure, which was also 3.0%. So when we look at the trend, the inflation trend, let me just pull out this a bit. When we look at the inflation trend, all we can see is inflation has been ticking lower and lower and lower. What we can notice is the US inflation peaked at something like 9.1, that was in July 2022. And from there, we can see a downtrend. It has been ticking lower and lower towards the 2% Fed's target. And currently, it's standing at 3.0, just 3.0 net. So all we can see is it's getting closer to the 2% Fed's target. And as it gets closer to the 2% target, we can notice this kind of sticky zone it has been to since July 2023. We can see inflation has been in a sticky zone. It's not edging higher and it's not coming down. However, the thing is the overall trend is a downward trend, meaning the Federal Reserve is doing a very great job to combat inflation. So as it gets down, we expect the Fed to start cutting interest rates, and currently the market is pricing in a 53% chance of a 25 basis point rate cut at the next meeting in September. And that's further supported by the cooling of the labor market. And that can be evidenced by the NFP report, which came out on Friday, 2nd of August of this very month. And we can notice the NFP came out showing they had created 114,000 jobs, and the market was expecting 1,076,000 jobs. The previous report was actually revised to 1,079. So the actual figure was actually lower than the forecast, both the forecast and the previous readings, meaning showing signs of cooling in the labor market. Not just the jobs that were created ticked lower, but the unemployment rate also ticked higher. As we can see, the actual reading came out at 4.3, and the previous, both the previous and forecast was 4.1. So as the labor market cools down, the Fed will be forced to cut interest rates, which is bad for the US dollar. So all these point to some sort of weakness in the US dollar. So I personally still view more room for US dollar weakness, meaning we can potentially see more room for the upside on pairs like GBPUSD, Euro USD, gold, and US equities or US indices like Nasdaq. However, let's not expect the weakness to happen forever, since it's not only the US that has been facing issues with their economy. We know that in the euro area, they've already faced the same issues and their banks have already started cutting interest rates. We know the European Central Bank, the Bank of England, have already cut interest rates. Even other banks like the Bank of Canada, Bank of New Zealand, the Reserve Bank of New Zealand, they've already been cutting interest rates. So since the US dollar is the global reserve currency and it's not the first, it's behind the curve of cutting interest rates, this will make the downside for the dollar limited, meaning we expect some room for dollar weakness. and after we shall see some strength bouncing back. We shall see some bounce. We shall see some dollar strength coming back onto table. So what does that translate into? When we look at the dollar index, the US dollar index, this is what I'm talking. Technically, we can see we had this move, something like this. After this break of structure, we had a break to the upside. We created a higher high, meaning the trend had changed to the upside. After that break of structure right here, we can come and actually mark it out. This was the break right here, and after the break, price came and traded into this discounted demand right here. And it formed a change of character just right here. And after this change of character, at the moment I'm interested in only one zone, just this zone right here at the extreme, that is completely unmitigated, just right here. So we can expect price to come and trade into this zone for a move to the upside. Or if price trades through this zone, we even have a very clear and unmitigated demand zone at the extreme, just right here. So in my own opinion, in my own analysis, looking at the technicals and the fundamentals, I expect a move to the downside before we move up, or even potentially coming to the downside to come and mitigate this demand at the extreme before we see a move to the next move to the upside. Basically, that's what I see for the US dollar in general. Next, let's look at the Euro USD, GBP USD briefly.